Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support for the California MBA, in large part so that we can continue to be the strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors, and those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support for the California MBA. We really appreciate it. With that, I'd like to welcome today's guest, Adam Carmel, with us, founder and CEO of Poly. Adam, welcome.
Hi, thanks for having me.
I know we're going to see each other at Mortgage Innovators Conference here in a couple of days, but I was happy that we could have you as a guest on Connect. I always start out with asking people how they got into the mortgage industry, but I love a good entrepreneurial story. So I'd like to hear how you got into the business and the journey of starting and founding Poly.
Sure, that'd be great. So I started my career in the mortgage industry in 2007, right before the great financial crisis, and I went to go work for a mortgage company that became quite large while I was there, and it's really where I learned everything. About approximately 7 years after I'd started there, I left and started my own mortgage company. And the idea initially was to build our own loan origination system to drive down the cost of origination. And that was in 2013, but very, very shortly thereafter, within about a year and a half, I thought that the much larger pain point in the industry had to do with the capital markets infrastructure, specifically starting with the pricing engine space. And so we went to work and built our own proprietary pricing engine instead. And we deployed that in 2015. We replaced the legacy incumbent provider that we were using, and we saw massive ROI and value over the following couple years, 3 years, 4 years. And so then I later did a bunch of research to understand, like, who else is out there, and it's all the same folks that exist today. And it was very clear that the solution that we were using prior to our proprietary solution was the best. And so I went to our board at the time and I said, hey, I'm really excited about building the mortgage industry's first vertically integrated capital markets solution that's cloud native, very cutting edge, and that would provide the mortgage industry unlimited flexibility, granularity, scalability, and so forth. And so they said, okay, if this is what you want to do, let's do it. So we sold the mortgage company in 2019. We took some of that money, and Poly was founded in April of 2019, and off to the races we went. And so for a couple of years, we were exclusively focused on building this back end that achieved those goals end to end. Unlimited flexibility and granularity and configurability. And then kind of over the course of time at Poly, we got very focused on driving value in certain phases. So the first phase was this patent pending margin management engine. The second phase was end-to-end automation. The third phase, is, we call it internally revolutionize the loan officer experience and so forth. And now we've got multiple things we're focused on. So we're very excited about where we are, and that's the story.
That's so interesting that you developed this from being a mortgage banker and knowing what it is that you wanted and needed to make your company successful and efficient. So that's a great background. I appreciate learning of that. So you got into this crazy business right before the financial crisis, which was a very interesting time for all of us. So what advice would you give to a young mortgage professional just starting out in this industry, especially, I think, as it relates to technology and maybe the lender-vendor paradigm?
It's not a straight line like anything else in the world, but this particular industry, it's up and down more than most. And so, you need to have a lot of grit and determination, perseverance. You need to know that there's going to be years where it's really tough, and other years where it's really great. But over the course of time, the industry has proven to create a tremendous amount of value for the consumer, for the people in the industry, and so forth. And so that's like number one. But if you don't like volatility and it is a tough industry to be in. And that's number one. But number two is I would say that when you're starting a company or participating in a new company, or even if you're going to move to a company that a new employer, I would say that there's probably like two things that really, really personally I would look for. One is culture. Are you entering a culture that wants to innovate and is thinking about their future? What's my 3-year plan? What's my 5-year plan? And if they're only thinking about the day-to-day and what happened last year, it's very hard to think about durability in this industry. And just as long as there's a culture of long-term thinking and investment in innovation, culturally speaking, that's a huge plus. And I don't mean necessarily only on technology. We'll get there. It's constant refinement of policy, constant refinement of process, constantly thinking about who's on my team and so forth. Then, of course, is the software and the technology. And you want to align probably with those companies that have a very strong balance sheet, that are constantly innovating, that are deeply concerned and passionate about customer service and support, and are super responsive and constructive to that partnership. And so those to me are the things that are critical, is an individual or a group of individuals that is thinking about the next 2, 3, 5 years.
That's great advice. I think, matching your desires and workplace environment with corporate culture, company culture is a big part of it, right? You have to be happy. You have to be happy where you're at and feel like you're contributing, to something that is a platform that you support. Great advice. We appreciate that. So, you've had long history in the industry. We are, coming off 23 was, very, very difficult year. 24 is a little bit better, but still not the market that, the mortgage industry has enjoyed for the last several years previous to that. How is Poly working with lenders to be successful in a market like this?
Yeah, absolutely. I think there's just luck in life, and there's a bit of luck in how we've pursued our feature set and our functionality, and kind of goes back to those phases. I mean, of course, allowing for unlimited configurability and flexibility allows for our customer partners to configure their margins and to see an improvement in their revenue per loan as a result. And then, the second phase, that's end-to-end automation, has allowed for our customer partners to drive down their costs, get more efficient, streamline processes, reallocate people and other resources to other parts of the business. And so, this has been a very tough market. Of course, everyone is focused rightfully on their unit economics. Yeah. And for us, we've been very focused on how do we drive ROI? How do we show the value that we can create? But most importantly is to collaborate with our customer partners on, okay, what is their current set of configurations, their current margin management construction? Where are they not automated? Where can we help drive down costs or improve their revenue per loan? And we've been very fortunate that we've been able to show a shift in those things by moving from other legacy providers to Poly. And so for us, it's all about partnership and collaboration. And then even on an ongoing basis, we're constantly wanting to listen, learn, how do we innovate? What can we do to be more supportive? Internally, we are just myopically focused on our customers' success and happiness.
Driving down costs, creating a more efficient system, that's what all lenders are looking for. So congratulations to you and Polly. And I also want to thank you for being a member of the California MBA. You're also a sponsor of this year's Mortgage Innovators Conference. You definitely have an innovative platform, so I'm happy that we'll be welcoming you there. We'll see you here in just a few days there. But I'd love to have you share with our listeners why you choose to support the organization.
It's a no-brainer. You all are, I've followed you all for quite some time, and to be able to participate in this has always been something that we've talked about internally here. And I think y'all are hitting on all of the right points, whether it's how to innovate, just the questions you're asking today. It doesn't necessarily only mean technology, culture and so forth. Like, what can we be doing to help support lenders and others, banks and so forth, and whether that's even on the regulatory side as well. So it was a complete no-brainer. I think you all should be extraordinarily proud of what you've achieved today, and we're just happy to be like just a tiny little part of it. So thank you.
Well, we are grateful to have you as part of the organization and look forward to seeing you in a few days. Adam, thank you so much for being on Connect. It's been a pleasure.
Thanks for having me, Susan. Great to speak with you.
And thanks to all of you for joining us on today's episode. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcasts, and Spotify. That's it for this week, and we'll see you next time on Connect.